Hi everyone, Jacob here from Finaloop. The world of bookkeeping isn't always too interesting, but now there's actually a big story unfolding, the collapse of Bench, which I think is really fascinating. So I'm just going to kind of walk you through a step by step of who Bench is, what happened, why I think it may have happened, and where you can take things from here. So first of all, Bench was founded approximately 13 years ago, and they started out in Techstars New York City Accelerator. They were originally known as 10 Sheet Inc. And at some point they rebranded, changed their name, and moved to Vancouver. They eventually grew to the size of over 600 employees. Raised lots and lots of venture capital over the years, over 100 million. We've been seeing is around $113 million. Bench's last round was in 2021, where they raised 60 million. Venture round, which was led by big investors like Contour Ventures. Bain was involved. A big name you all know, Shopify, also invested. They're really a top-notch investors. It's interesting. There's on social on the last couple of days, Ian Crosby, the former founder and CEO of Bench, has been posting. He was let loose right after that round C in 2021, and he kind of blames the trend and the downturn of the company on letting him go, company losing vision, and VCs not pushing the company in the proper direction. Whether that's true or not, I do not know. In any event, that is the last round that we know of, and it takes us fast forward to December 27th, 2024. Bench put this notice on their website that they are closing shop, which was a huge shock to, I think, most people in the market, as Bench is a very big player with over 10,000 clients. And it was not clear at all from that initial notice what will be happening going forward. They said at some point, presumably December 30th, they're going to be giving some kind of access to financials until March. And they recommended looking at a third party called Kick instead of them, meaning moving on to Kick. Okay, which is very strange. I don't know that much about Kick. I honestly never heard about Kick beforehand, but they're not a big company, and they're relatively new. They just raised a seed round not too long ago. So to push your huge client base towards this very early stage company that doesn't really have the infrastructure for that was a strange and unclear move. Now the story gets even stranger. So what happened after that? At some point on December 28th or 9th, probably December 29th, Bench took that off of their website, meaning they're no longer referring to Kick. They're no longer saying we're shutting shop, figure out what to do. But they came with a new notice that said we're gonna publicize at some point, 30th of December, how to continue services. So what it seems like is that in the last 24 hours, I'm recording this on December 30th before any more updates from Bench, but it seems that there was some kind of bidding for Bench for their book of clients, and they were acquired. Nothing's final yet. No one really knows, but there's a company called employer.com who's in the payroll space. And from a previous scraping of Bench's website from an earlier version a couple of hours ago, it looks like they had some kind of banner saying they were acquired by this company, and then it was taken down. I don't know exactly why and exactly what's going on, but that's pretty much where we stand today, meaning there's total lack of certainty, right? Bench closing shop couple of days before year end, when everyone's depending on their financials just to have those financials for the tax reporting, right? The 1099 reporting is coming up end of January, and the company's reporting deadlines for tax filing are in mid-March and mid-April. So that's a huge, huge deal. So no one really knows where things stand, and I keep on following, and we'll definitely make sure to keep you updated. But that's pretty much where things stand today, meaning Bench probably was sold. Are they going to continue giving services, not continue giving services? Nobody really knows. Under this new entity is a payroll entity. Can they give services to Bench's customers who are across many different industries? Probably not. So there's a really total lack of clarity at this point. Okay, so that's kind of my 2 cents on what happened based on the data that we have today. Okay, that's number one. Number two is, why did this happen? Meaning, a company that raised $113 million and has a huge customer base of over 10,000 customers across many different industries, big businesses, been around for a while. Why did they just implode on one day? It's a wild, wild story. Haven't heard too many of other examples like this before. Reminds me a little bit of the whole run on the bank that happened with SVB back a couple years ago. So I don't know this for a fact, but I think it's possible there was some kind of secured debt, which had debt covenants which required that bench meet in order to not call the debt back, meaning they have to have a certain gross margin, right? Which is net sales less COGS. And if the gross margin is below a certain amount, that's it. The lender can call the loan and ask for the money, or a certain EBITDA margin, right? Earnings before interest, tax, depreciation, amortization, or a certain net margin, or a certain debt service ratio, the SCR, right? There could have been various debt covenants. So what happens is, when you borrow money and you don't meet those requirements, then the lender can say, give me my money back. And when you have startups that a lot of times are running on very low cash margins, that's an issue, and that might lead to an immediate claim for insolvency. So it's possible that's what happened. A lot of times banks are willing to negotiate and are happy to negotiate. No one likes dealing with a bankruptcy, but if you don't have a good enough story and you can't really explain why you're not meeting those covenants, then sometimes the lender will just ask for the cash back, and all hell breaks loose. So I'm not sure. I don't have real data, but there's a good chance that's why Bench really just imploded. And then after that, when it was in trusteeship, it seems kind of opened the door for various bidders to buy them. Beforehand, again, referring people out the kick and then taking that off when probably because they were acquired by employer.com. So it's a really interesting, really juicy story. And that's kind of where everything stands today. So what are my key takeaways from this? So Bench was a totally sector agnostic bookkeeping firm. They got a lot of flack for that. And the problem is that each sector has their own complexities and their own issues that need to be dealt with. And if you try to go totally horizontal and you don't have a good grasp and understanding of specific industries, then you're not going to be giving good services. So just speaking about Finaloop's industry, we work in e-commerce and we are experts in e-commerce. So if you were on Bench and you are looking for an e-commerce accounting firm that can help, we are a great solution. Or if you're in other industries, you should be looking for, if you're a startup, you should be looking for some kind of software accounting firm that knows how to deal very well with software brands. Or if you're in a restaurant business, you should be looking at someone who really knows how restaurants are run, because each sector has their own intricacies and details. And if you have someone who's way too sector agnostic, then you're not going to be getting really good services. And at the end of the day, it might end up leading to their ultimate implosion. So when looking for a new service provider, I would look for someone who understands your specific industry. That's my first piece of advice. And second piece of advice is, it's really unclear what kind of data Bench will be providing. Will they be opening up the data? What kind of data? Once it is open, download anything you can from anything you uploaded there as well, any invoices, receipts, payroll, anything you put there. Download all of your bank statements. And again, all the statements that you have from Bench, and keep it ready for your next bookkeeping firm. Because it's unclear, even if you do get data, will it really be open through March? No one really knows. And last but not least, you should have your taxes in mind. You have, as we mentioned earlier on, a few deadlines coming up, like your 1099s, like your corporate filings in mid-March or mid-April. So getting everything together quickly, and possibly filing for an extension, which would give you an extra half a year for reporting, but not for paying tax. Meaning, if you have to actually make a tax payment, you have to make an estimate based on whether you're an S Corp, C Corp, etc. But it's definitely worth trying to move fast, getting everything in order, and finding a bookkeeping or accounting firm that really understands your industry to help you get your 24 books closed and get all of your taxes prepared. So that's it for today, and we'll definitely keep you posted as things develop here.